Well, where dividends have held up well have been in what we call the COVID defensive areas like healthcare and utilities. But looking forward, we think it's the COVID cyclical areas where you're going to see most earnings, but also dividend growth. So those would include financials, energy, industrials, consumer staples. And what our historic work shows is that dividend growers tend to convincingly outperform the market over time. And we're expecting much the same over the next few months from those cyclicals with growing dividends in the UK and Europe.
Here's a problem, Jeffrey. You keep trying to tell me that there's a positive story there. I keep worrying about that story as well. So where are you and I going to find common ground? Where are you worried about the market losing a bit of steam?
Well, we need to watch the current earnings season to see the trend in earnings revisions, which has been strongly up in Europe and the UK for several months. Will that continue? So that's something important to watch. Secondly, looking forward to 2022, will corporate CEOs have the visibility and the confidence to resume capex, to resume M&A activity? That's a question mark. Thirdly, will we see rates rise prematurely? We think there's no chance. The central banks are telling us that rates are going to stay low for longer. So that risk we think is a lesser risk for the moment.
Can I just round out the conversation and ask you about the euro, because we saw a little bit of buying when we pushed up to the 123 handle earlier this year, but we've drifted off those highs. You think there's going to be further momentum? Just give us a sense of how much more.
Well, the euro strength last year was driven mainly by dollar weakness. And looking forward, we think the euro goes higher based on domestic drivers. Real yields haven't fallen in Europe over the last year. They have in the US. Growth momentum, we think, will pick up as we get vaccine progress. And finally, the Eurozone is now stable with no risks. And that, we think, is supportive for the euro. In the very short term, we could face a consolidation period. We're watching the 120 level as the key support level. But assuming that holds, we think 124 against the dollar over 3 months and slightly higher over 6 to 12 months.